Hello and welcome back to the channel. I have an interesting video for you today. Inflation is going crazy and not cooling down. In fact, a headline read in MarketWatch, the average household is spending an extra $250 a month or $3,000 per year due to the high inflation. But middle-aged Americans are paying even more. What that means? That means that the rise in inflation is hurting the pocket of labor force, as the rise of wages is lagging the pace of increasing inflation, as we explained in previous videos. And if we see the month-over-month inflation, it's still getting higher and higher, and people start waking up to the fact that the pandemic and the so-called supply chain bottleneck has a little to do with the rise of cost of food, because a person can adjust for the high gas price by driving less or using public transportation, for example. But he is not ready to starve and he is forced to pay the high food price. People start waking up from the dreams of using the stimulus check during the lockdown and the fact that the helicopter money stopped. And they must pay for food and debt from their own paycheck, which cannot cover all the expenses. Plus, the geopolitical map event with the crisis between Ukraine and Russia has a big effect on the energy future and will have its implication on the stock market. So for the ones following the channel, congratulations, you didn't fall for the trap of the last pump and dump, as you know that we are still far from the bottom and more down moves will be for some times. With the Fed are 100% rising note in March and some of the Fed presidents aiming for a 50 basis point increase from the get-go, because the Fed has to choose from these three choices: tightening aggressively, which send the economy in a recession, and this option is most of the hawk of the Federal Reserve are asking for. Second, do not do nothing, which means hyperinflation, and this is what Jerome Powell favor, as his worth and the richest 1% won't be affected. Who cares about the regular Joe and Jane? And third, gradually tightening, which will send the economy in stagflation. With that being said, let's cover the market. And here you go. The Dow is down 503.53 points, or a decline of 1.43%. The Nasdaq is down 394.49 points, or a decline by 2.78%. The S&P 500 is down by 85.44 points, or a decline of 1.90%. The sector's performance: all the sectors are down except of energy, with the laggards of last Friday are technology, consumer cyclical, and communication service. Futures, we see gain for the energy sector without exception. Softs for coca, cotton, orange juice, coffee, lumber are down. Sugar is on the flat line. For the metal, we see a surge for gold with gain of 1.26%, reaching the spot gold price of $1,860. Silver is up slightly by 0.33%, with losses for platinum and copper. Palladium is up with 2.11%. Meat with losses for live cattle, feeder cattle, and lean hog. Lean hog is down big by less than 1.26%. For grain, Grain gains all over the board for soybean, soybean meal, soybean oil, corn, wheat, rough rice, and losses for oats and canola. Let's take a look at the heat map. The heat map is for the last Friday is red all over the board except of the energy sector, and here and there names. The weekly performers are slightly better, but we see that the technology sector is down, especially the high multiple. Communication service also down, consumer cyclical are down, and the surge of the high value name, the Warren Buffett kind of names such as Verizon, Disney, the banks, and some other sectors such as the energy because of the geopolitical situation in the world now, energy is surging higher, as well as some basic material names such as Freeport McMoran. Let's take a look at the charts, and let's start with the daily time frame. For the SPY, we saw here the rip and the bull trap, and then the dip right away, erasing 1, 2, 3, 4, 5, 6, 7, 8 days of gain was raised in the last 2 sessions. For the Qs, same thing. We saw the rip and then right away the dump, and the dump is on big volumes. The IWM is a little bit better for the small cap compared to the SPY and the Qs. We see that on the histogram is green and the bars are getting shorter. The MACD line are still pointing upward, but with a topping. The RSI is in the overbought territory, so from technical we expect a trading sideways or another leg high that will take us all the way to the resistance of $210. Let's take a look at the VIX. For our time frame, we see here the MACD crossing and start the green impression on the histogram with the bars getting bigger and bigger and the line are pointing upward. This means more move upward for the VIX. We'll expect another spike before the VIX will cool down. Let's take a look at the dollar. The dollar on the daily time frame, we see the red impression on the histogram are getting shorter and shorter, with the MACD line are about to cross. We are working the oversold territory and moving upward, and this is bullish for the dollar index. So we will expect another leg higher above the resistance of $96. Let's take a look at the 10-year yield. The 10-year yield is trading well above the support of 1.77%. At this moment is at 1.91%. On Friday session, the 10-year reached a 2% high, which is a pre-pandemic reading. The last time was at this level. It's on July 2019. The green impression of the histogram is persisting, but the bars are getting shorter and shorter, and the graph is working overbought territory and pointing downward. We're expecting a cool down or a trading sideways, but what we have to have in mind, until March, this 1.77% support, it seems to be a strong support. Let's take a look at the gold. The gold did cross the resistance of $1,834 and now is trading at $1,858. We have a top here of $1,870. We see that the gold is working its way higher and higher. We can materialize that with this line for the daily extended, and is creating higher highs and higher lows, which is bullish for gold. Let's take a look at individual stocks. We'll start with Apple. Apple almost reached the support of 167.45, which we drew in previous videos, and seems to be a strong support. As we see, we have one time, second time, and this should be the third time. The third time Apple is knocking on the support of 168. If Apple will breach the support, we might expect a downward move to this trending line, which will send Apple to trade in the range of the $156 and the $160 range. If the support is tested one more time and bounce upward, that means that we will have a rectification and we will have another move higher, another leg higher for Apple. But technically speaking, we see that the green impression on the histogram are getting shorter, the lines are crossing, as well as the RSI is pointing downward. So technically speaking, more downwards for Apple. Tesla now is trading below the importing resistance of $995. As we see on the histogram, the line are pointing downward and flattening, as well as the red impression on the histogram start building. We are in oversold territory. This is basically mean that Tesla will be trading sideways for a while under the support of $995. AMC technically is looking better, and we see that the chart in one time did cross briefly the resistance of $20, which is a very important resistance, and the volume are keeping getting bigger and bigger. We see as well that the green lines on the histogram are getting bigger and bigger, and the MACD line crossed and pointing upward, as well as we didn't reach the overbought territory. If the apes will keep on stamp fitting and buying calls and the stock, there are a big chance that we will jump over the support of $20 and maybe we'll keep the dream of going to the moon shining. This is a big test for Monday session, and we will see how AMC will trade around this level, and we will closely monitor if AMC will cross the support of $20. Finally, let's take a look at Bitcoin. Bitcoin reached the resistance of 42,000 and did trade a bit above it, and then a pullback down, and at this moment is testing the support. If the support will be confirmed, the chart will bounce upward. If the support will breach, the chart will be flashing to the downside till the 33,000 level. The MACD line are pointing upward with the flattening on the top, with the histogram bar are getting shorter and shorter, and the RSI chart is working the overbought territory and start pointing downward. Monday session is a decisive session for the trade of BTC. I don't recommend any move on BTC until after the Monday session to see decisively if we will protect the support or will be trading downward. That's all what I have for you today. Thank you for watching, thank you for listening, and we will speak soon. If you find what presented on this channel helpful, like and subscribe to improve the algorithm, and follow me on social media.